Hi, Luke Fannin here at Loan Institute Technology Business School, and we're going to look at this bank reconciliation question, which is pretty straightforward, so we'll run through it fairly quickly. You'll see here we've three things to do: reconcile the opening balances, complete the adjusted cash book, which is this T account, this bank T account up here. It's also known as a cash book, and then prepare the bank reconciliation statement, which is really an adjusted bank statement, and all we're going to do there is start with the closing balance of 605 and adjust it. The same way here with the T account, we're going to start, when we do number B, we're going to start with the closing balance and adjust it for any errors and omissions. And in the first part, part A, reconcile the opening balances, we're going to start with the opening balances and reconcile them. So that's what we'll do first, is part A. So here we have the T accounts. That's the opening balance in the bank T account or the cash book, and this is the opening balance here in the bank statement, and you can see they're different, 830 versus 910, so we have to reconcile them. So it always follows the same format. You start with the balance as per the bank as for the bank statement, which here is €830, and we put that in. Write that down, your opening balance for bank statement. Then the next thing we do is we look out for we're going to take away any checks that relate to prior periods, and if we look at the bank statement, I'll show what you mean. So in our T account here, our checks all start with 91, 92, 93, so the P Armstrong is writing checks out to suppliers, and in April his checkbook started on 91. When we look at the bank statement, most of the checks are 91, 92, 93, 94, so they're all from checks that were written, but we see here check 87, and this 87 is earlier than the 90s up here, so it must have been written in a month prior to March. So what we need to do then is just take that away from the opening balance, and that's what we're going to do now. And it's just taken away, and we're left with 650. So really, the opening balance was 830, but there's a check that related to previous months, so that should be taken away to bring the opening balance up to date. So really 650. Now, if there were other checks, they get taken away here, earlier checks, but there are no other checks built before 91. So 87, check 87 is the only one that's there. So then when we look at our opening reconciliation, we're trying to tie in the opening balance of 830 to the opening balance of 910 up here. So 830 versus 910, these here. So at the moment, what we've done with our reconciliation, we've gone from 830 down to 650, and we want to get as far as 910. So the difference between 650 and 910, before I do that, that's our, so the opening balance for the bank T account is 910, and we now have changed the bank statement balance from 830 down as far as 650. So the difference now between 650 and 910 is 260. So there's a difference of 260, and when we look at the bank account, so the difference now is 260 between the two balances. We're looking for 260, and we go to the bank account, and at the start of the month there's a lodgement here, no reference, for 260, so that's our reconciling difference. So this lodgement here is for 260. All the other lodgements, there's one on the 6th, the 15th, the 15th, and they're here recorded in the bank account. So this lodgement relates to a previous period, which, probably the end of March. P. Armstrong made a lodgement 31st of March and wasn't processed by the bank until the start of April. So that 260 and that 180, both of them relate to the previous month. So basically all we do is go 830, take away the check, add the 260, and we should tie back into this 910, and that's what's going to happen. So here we have our lodgement, and 830 minus 180 is 650, and then 650 plus 260 gives 910. And now we've reconciled the 830 in the bank statement to the 910 in the T account, and by doing that we're going to cross out the 260 and the 180 here, and the opening balances, we're happy with them. They're all been reconciled, and that is the part A done and complete. So now we've two things to do: B and C, the adjusted cash book or bank T account and an adjusted bank statement, and they will appear here. Here's B, adjusted bank T account, and our adjusted bank statement is going to go down here, and it doesn't matter what order you do it in. What you have to do first is finish off the ticking exercise, and that's what I'm going to do now. So I match check 91 here to check 91 here, 505 versus 505, they agree. Check 92, it's 690 here versus 660 here, so this should have been 30 more. So I'll just write plus 30 beside that, and I'll cross this off. Check 93 is 415, and it's 415 here. Check 94 is 325, and here is 325. And there's no check 95 or 96, so I am just going to circle these to show that these weren't recorded. And the bank charges are there, 65 versus 65. And now I look at the lodgements here. Lodgement B in was 600, here B in was 660, so this should have been plus 60. Cross that off. Lodgement ST 313,720, and ST here is 1050, so the two of them together is 1050, so that matches the two of them. Just to double check so I'm not making a mistake. 330 plus 720 is 1050. And lodgement NI on the 27th of January, there's no lodgement in here, so that's another one that hasn't been recorded. Not been recorded, so it hasn't been processed by the bank. And then down here we have a credit transfer we didn't match off. We have a dividend and a standing order. So now we're in position to do the adjusted bank T account and the adjusted bank statement, but I'm going to do them rough first so you can see. So basically the adjusted bank statement is going to start here with the 605, and all we're going to do is show the items that haven't yet been presented for payment, which are two checks, checks 95 and 96 for 360 and 120, so minus 360 minus 120, and then there's a plus 620 lodgement put in at the end of January, hasn't been processed by the bank, but when it does, that's going to be 620 added in. And that's our new bank statement, and if we add that up we should get a new balance for the bank. 605 plus 360, sorry, 605 minus 360 minus 120 plus 620 gives us 745, and so that's our new adjusted bank statement balance, and hopefully when we adjust the T count we should get 745 as well. That would look in your answer book like this. So that's our adjusted bank statement, and it's always relatively straightforward like that. Any checks that we haven't ticked off that are in the T account and any lodgement. And now we need to adjust the T account, and our starting position for that is the closing balance, and we correct any mistakes. So there's one mistake error here, that needs to be corrected. 60 plus 60. So if this was a minus 60, we'd put 60 on the other side and change the sign to a plus. But here it's plus 60, so you just put the change on the same side. So 60, and that's to do with BN. And there was no other addition, and here on this side there's a change of 30 we needed to add to the credit side, so we add in 30 here to do a check 92. If that was minus 30, if that was the adjustment should have been minus 30, what you do is put 30 on the other side, but it wasn't, so we don't need to. And then we put in the items that were not recorded in the T account. So here there was a standing order, money out of 290. There's money out here of 130 as well, I just after noticing. So standing order of 290, money out is this side of the T account. So 290. And 130. And on the money in we had a credit transfer and a dividend. And all of these really are electronic payments, and it's just because they're probably because they're electronic, that's the reason they were not recorded in the T account. The customer didn't actually lodge the money or didn't write the check. The money was lodged in electronically or paid electronically, so that's why the customer forgot to record it. So now we need some money, show money coming in of 230 and then 175, and that's it. And then if we were to add that up, add up the debit side, 730 plus 60 plus 230 plus 175 gives us 1195, and take away the credit side of 30 minus 290 minus 130, and we get 745. And what that means is the debit side is bigger by 745. The closing balance now is 745, which is what we wanted to get because it reconciles with what we did down there. And I'll just show you what that looks like if you were to write it out. So I've just put in the entries, and there are all the debit entries. Here are the credit, and then just like I did, you add up both sides. The debit side is bigger than the credit, so the balance brought down comes on the bigger side underneath, and it's the difference between 1195 and 450, which is 745. So that means is the adjusted at the end of on the 30th of April, we don't have the 31st of April, the balance brought down on the bank is 745. And just to balance off the account, within the balance carried down as 745, it just feeds up, and now both sides add up to 1195. But this isn't that important. This guy is brought down on the underneath on the debit side, and now they match, and we know that we've done our reconciliation correctly because the bank adjusted bank statement balance 745, the adjusted T account balance 745. We've reconciled the two, and that's it. Thanks for watching, and I hope that was useful.